me and Vũ Trung Tuấn is offline presenter, and there are two online presenter is are Ngọc Phương and Thật Thảo. Ngọc Anh is absent because she has some problem with her health. Please come to the overview of our questions. Here is main content because the given questions is too big, so our group divided into smaller questions. The part one is the question which reports and what following standards and describe the understanding this standard. Question two is which reports will be used annually by enterprise and list down. And three are standard adopted currently by companies in Vietnam. 4 and 5 is the roadmaps, and the chief accountant should equip this knowledge. We come to the question one, which reports and following standard and describe understanding this standard. The questions about the answer of our groups is AAS is presented international accounting standards and is now updated into international financial reporting standards. And here's the point that answer the questions is AIS 1 does not describe the format of the statement of financial statement. Therefore, assets can be presented currently assessed and non-current, and vice versa. They are the same statement in IFRS. This standard does not prescribe the order of formats in which an entity presents items. And here are the formats of IFRS standard. And you could see that the format of GAAP, General Accepted Accounting Principles, and here are the formats of a financial statement in VAS, the Vietnamese Accounting Standard. And what is IFRS? And it's what includes international financial reporting standards. Here are some basics understanding about group about IFRS. Firstly, we discussed about conceptual framework. There are two qualitative characteristics. It includes basic qualitative characteristic and enhanced qualitative characteristic. In basics, we have relevance and faithful representations. That means relevance. That means some item is relevant. Is material. You have to represent it to the statement correctly. And faithfulness, that means you represent into the statement truest nature. Enhanced characteristic includes comparability, variability, timeliness, and understandability. With comparability, that means you can simply understand it. You can compare the numbers. And verify abilities, that means you can the users that they can search about the numbers and they can check it, is it right or wrong. And timeliness, that means the accountants have to give the information in financial statement in time so that managers can have enough time to make decision correctly. And understandability, that means you have to arrange the item clearly, and you have to, and you have to make it easily to understand that users. And requirements, you have the requirements of IFRS, the presentations of financial statement, including 5 statements. The first is a statement of financial position, or we can call balance sheets. The second is statement of comprehensive income, or you can call it with another name is statement of profit and loss. And third is a statement of change in equity, statement of cash flow and notes. And general features, or you can also call it assumptions. In IFRS is going concern that they assume the companies works for a long term. And if they change, they have to notes. They have to write in the notes of the company. Accrual basis accounting, that means revenue and expenses are recording by accruals methods, not cash method. That means when they incur, they have to account in this balance sheet. And fair values measurements. And we come to the question 2, which is presented by other members.
Yeah. Hello everybody, my name is Tuấn. I'm studying Ho Chi Minh University Automatic Finance. I would like to continue to answer the second question. A complete set of financial statement company as statement a final person at the answer of barrier. The second a statement of profit and loss and other components income for the barrier. The third a statement of channel and quality for the barrier. The fourth a statement of card files for the barrier. Final not company or summing of signification accounting public and author and important question 3
Okay, I would like to answer question 3. Although standard currently adopted by companies in Vietnam in detail, as we all know, the application of IFRS has been accepted by many countries as it helps to improve the quality of financial statement and compare international financial information. However, regarding to the preparation and presentation of financial statement, Vietnam is one of the few countries that has not adopted IFRS but is still applying Vietnamese accounting standard as we know VAS, and to perfect the legal framework on accounting and to meet the global accounting standards. On the 16th March 2020, the Minister of Finance publishing Decision Note 345 PDPTC approving the stream on application of international financial reporting standard in Vietnam. And according to Deloitte, after nearly 6 months of publishing Decision Note 345, more than 50% of survey enterprises said that they have applied or are preparing to switch chain accounting to IFRS. This shows the consensus on the importance of applying IFRS in Vietnamese business community today. However, most businesses take a long time to prepare financial and human resources as well as software system and policies. Besides, Vietnam is completing the legal framework to apply IFRS, so there are not many decision guidelines on applying in these standards, which lead to numerous difficulties for enterprise in general. As we all know that when preparing the first year financial statement under IFRS, many businesses need to prepare to face negative effect on financial statement due to large difference between current VAS and IFRS. That concludes my talk. Ms. McFern will continue the presentation.
Hello everyone, I am Phương, and now I will answer the question 4. Say a roadmap to implement this standard in Vietnam. There are 3 phases. First one is preparatory phase, and second one is first phase. It's called voluntary application, and last one is second phase. It's called compulsory application. For the preparatory phase, it's from 2020 to 2021, about 1 year, and the first phase is about from 2022 to 2025, about 3 years, and the last one is from after the year 2025. For the preparation phase, before December 2020, the Ministry of Finance will establish a board of translation and review to complete IFRS translation into Vietnamese. Before March 2021, the Ministry of Finance will develop and issue relevant legal documents to publicize the Vietnamese translation. For the phase 1 voluntary application, it was divided into 2 parts. First one is consolidated financial statement. It will follow in enterprises with the need and sufficient resources shall inform the Ministry of Finance of their voluntary application of IFRS, and the second one is separated financial statement. It's about 100% foreign direct investment companies, which are subsidiaries of parent companies located overseas, having the need and resources shall inform the Ministry of Finance of their voluntary application. The last one is compulsory application. It will base on the evaluation of the first phase. The Ministry of Finance will rely on the needs and readiness of enterprises and the actual context to decide on the game plan and the timing when IFRS application becomes binding on consolidated financial statements or separated financial statements for each group of enterprises to ensure effectiveness and feasibility. Okay, now I will invite Chung will answer the question 5.
As a champ captain, I think we should equip the knowledge outside school. Yeah. Here are some reasons for that. Because we have to know about leadership and management, and also we have to update in changing society to ensure the accuracy and complete the report. Also, communication with clients. In that, you have to provide most correct information to help the customer make correct decisions. And if you are a chef accountant, so you may suffer a loss from errors, and your business may become outdated, and there are no growth and decreases revenue from customers. Here are the reference material, and this is the end of our presentation. Thank you for listening. Another question, please.
Yeah, thank you for your representation. I would like to ask you one question. What are the advantages and disadvantages of when the chief accountant have the financial report like IAS with the VAF for the board director in controlling the company?
Thank you, and the last question for the team.
Và đây là câu hỏi cuối cùng đến từ người ban giám khảo.
So, thank you for your presentation. Do you see the questions topic 3, right? So, can you tell me the differences between the balance sheet, right? Here in the questions, and the balance sheet in Vietnam or another, and why in the balance sheet in the questions so they don't show the depreciation. Why? Right? Do you get my point?
We collect all the questions.
Okay, thank you.
I need to.
Take a mic, right?
I have some. I'm not sure about the questions advantages and disadvantages when accountants have IFRS and VAS in controlling company or board of director in controlling the company.
I want to say that the information from the financial report, according to VAS and IAS, when we use IAS financial statement, okay, what advantages and disadvantages the board director get the information from this to control the company. Understand?
I understand. Our team is Team 9 and we want to answer the questions from firstly, we appreciate the questions and we would like to say thank you to very good questions. And to answer questions one from Mr. Kim An, the question is what is the differences between VAS and IFRS? In our group opinions, the two biggest differences between VAS and IFRS is VAS is worked in rule basis, and IFRS will work in a principle base. I mean, VAS is the rule base because there's accounts and government have forced the company do that, and the accountants have no powerful to change the account, change the name of the account. So they just they must account on the prescribed accounts that already have on already have from authorities. With IFRS, the accountants have more powerful in that they can write a name for their accounts based on its nature. So and accountants also have the power to put it in different parts in balance sheets on other financial statements. That's the answers of the question one, and we come to the question two from Miss G. The benefits of the company for the following IFRS is that it may reflect the fair value of the fixed assets. So and when the market price increase, and the company can revaluate it and revaluate the assets, and therefore its accuracy to the nature of the assets, and also it costs to the disadvantages is that when the market price decrease, and that lead to the fixed assets price decrease, the fixed assets value decrease, and the company have to revaluate it. Maybe it's not only a times, but not only sometimes per year, and they maybe four times or over that. So they have to revaluate it. It's so time consuming and labor intensive for the company resources. This is the answers about group to answer the question 2, and we will come to the question 3 asked from Ms. Cheng. The question 3 is that why the depreciation there don't appear in balance sheets. In some balance sheets follow the IFRS because there may be 2 reasons for that. The balance sheets follow IFRS has no depreciation because depreciation is account expense that is deducted from the profit before tax in income statement, and the carrying amount of assets on IFRS balance sheet is based on its original cost less accumulated depreciation. And however, the depreciation does not affect the cash flow of the business, but it also reduces taxable income and therefore reduce taxes payable. And another reason is that maybe follow some principles of IFRS. The asset revaluation models allows assets to be re-evaluated to reflect their revenue at the reporting day rather than being depreciated over time. And if assets has been revaluated upwards, its carrying amounts on the balance sheet will be higher than its historical cost and may not require depreciation on the balance sheet. And that is the questions from our group. Thank you for your questions.
Okay, according to the Ms. Chang, I would like to explain you a bit about your answer on the difference between VAS and IFRS. You stated that the VAS is a rule-based. That VAS is also principle-based. But you understand that we are follow the rule-based because we have the accounting law, right? Yeah. So accounting law is rule-based. I agree. But VAS is also principle-based. We have maintained 2 systems. Law is based on the accounting law, but we also have VAS to settle the principle for all the accounting works. Yeah. So just correct a bit on this.
I thank you a lot for your help in improving my questions, improving my answers.